Good morning. It is hump day. It is Wednesday. It is the Bubba Show. It is FOMC day, or as we like to call Uncle Ben and his Merry Men of Thieves day. This is a day where they're going to go ahead and just make a decision on interest rates. So as we've had per se conversation in the last few months, as we know they can't lower interest rates because they're already at zero. But there has been a lot of scuttlebutt and there has been a lot of infighting within the Fed between the hawks or the hawkish, which wanted to raise interest rates, and the doves or the dovish, which want to keep rates lower. What we really care about is really the voting members, not the members who aren't voting. There are a number of non-voting members, like the guy from Minneapolis who keeps telling us that we should keep interest rates lower, but he's wrong, and I've been saying that, and we are now starting to see the way the effects of this are starting to play out. And if you haven't noticed, all you have to do is take a look in Japan and see what's happened to their market. After being up 50%, they are now in a bear market. They're trying the same process that they tried 25 years ago. They're retrying it again, and that's what we're doing. And that's the type of things, depending on how we can come through this, that the market is looking at. We're looking at a potential. Now, we're not going to call it disaster because we trade one level at a time. But these are things when the Fed and when cheap money gets involved is a problem. So what we're looking for is if the hawks do actually win out, and I don't think they will raise this week, but they may, the lingo is what you're going to listen to. If the hawks start to win out here, you could see some massive selling early. Now I think that cooler heads will prevail after that, and you can get a little bit of a rally off of that. Because the truth of the matter is that for this economy to grow and for us to get in a better shape and to really benefit the average Joe, we need the FOMC, we need the Fed to start raising rates to create some movement instead of just taking care of the banking cartel and allowing them to bail out of their toxic debt. So when you look at what's going on, again, we're going to look to react to what they say. You know, we know that Uncle Ben is probably nearing the end of his career. You've seen what Volcker has said, you've seen what Greenspan has said, and nobody other than the banks really agree with Ben Bernanke and his actual strategy, because it has not helped us one bit. It has only helped Mr. Potter. George Bailey is getting it stuck to him again because they are allowing the banks to overtake and reduce and remove their toxic debt throughout all this program. So what we want to look for those, we want to look for the verbiage of what they're saying, and if they indicate that they're going to taper, there is going to be some heavy selling pressure, because what will happen is all the people that borrowed money to go ahead and invest are going, their rates are going to go higher if rates start to go higher, because they're all on roving loans. They're all on rate-based loans. So if the rate goes higher, they're going to have a little bit of problem. There's going to be some selling pressure. Again, I think overall it'll be much better for the market, and I think a correction is healthy, which we will talk about tomorrow. You want to hear me on the radio? You want to hear my opinions? LibertyExpressRadio.com, the Bubba Show, the Bubba Exchange. Also would love you to come on my options call Monday night, Average Joe Options. That's email me at todd@averagejoeoptions.com if you'd like to participate. I'd like you to check it out as my guest. For Wednesday, the Bubba Show. We'll talk to you Thursday.